Welcome to the Big Show, your ticket to the stock market. All right, listen up, folks. Finance Boss here, and today we're talking about something huge. We're talking about the stock market. Booyah! Now, I know what some of you are thinking. That sounds scary. It's too complicated. It's only for rich guys in suits. Wrong, wrong, wrong. The stock market is for everyone. Yes, even you, sitting there in your pajamas, wondering if you should order another pizza. It's your chance to own a piece of the action, a piece of America's greatest companies. You think this is some kind of exclusive club? Think again. This isn't about secret handshakes or fancy degrees. This is about understanding a few simple things. It's about doing your homework. It's about having the guts to get in the game. And trust me, the game is exciting. It's a roller coaster, sure, but who doesn't love a good roller coaster? Especially one that could make you some serious dough over time. We're not looking for a quick buck here. We're looking to build wealth, slowly, surely, smartly. That's the Finance Boss way, baby. So, you're a beginner? Perfect. That's why I'm here. Really quickly before we get started, I'd like to remind you that we upload frequently on this channel. So if you enjoy our videos and love financial tips and ideas, you'd might as well hit the subscribe button. It doesn't cost a thing, and it helps us get more folks to see our videos. Okay, let's make some money. Skedaddle. What in the heck is the stock market, anyway? Hint, it's not a supermarket for socks. Okay, let's get down to brass tacks. What is this thing called the stock market? Imagine a giant farmer's market. But instead of selling apples and tomatoes, people are buying and selling tiny pieces of companies. These tiny pieces are called stocks, or shares. When you buy a stock, you become a part owner of that company. That's right, you could own a sliver of Apple, or a bit of that company that makes your favorite sneakers. It's like owning a very, very, very small slice of a very big pizza. And who doesn't want more pizza? Now, these companies sell shares to raise money. Maybe they want to build a new factory. Maybe they want to invent the next big thing. So they offer these shares to the public, and people like you and me can buy them. The stock market is just the place where all this buying and selling happens. It's a system that helps companies grow and helps regular folks like us build wealth. Why you, yes you, should care about stocks. Money, honey. So why should you, an intelligent, good-looking person, care about the stock market? One word, folks: opportunity. Opportunity to make your money work for you. Think about it. Is that cash sitting in your savings account doing much? Probably not. It's earning, what, pennies? That's not going to get you to your dreams, is it? The stock market, over the long haul, has historically provided much better returns than just letting your money sit there and collect dust. We're talking about growth, people. Real growth. Investing in stocks is about participating in the success of businesses. When companies do well, their stock prices tend to go up. And if you own those stocks, your investment grows. It's like planting a money tree. Okay, maybe not exactly like that, but you get the idea. It's also about beating inflation. You know inflation, right? That sneaky little thief that makes everything more expensive each year. If your money isn't growing faster than inflation, you're actually losing purchasing power. The stock market can help you stay ahead of that game. And it's not just about getting rich quick. Getting your foot in the door, opening a brokerage account, it's easier than assembling IKEA furniture. All right, you're convinced. You're ready to dip your toes into the stock market waters. Booyah! But how do you actually buy a stock? You can't just walk into Apple headquarters and ask for a share. Tim Cook is a busy guy. You need something called a brokerage account. Think of it as your personal gateway to the stock market. It's an account you open with a brokerage firm, and they're the ones who will actually place your buy and sell orders for you. They're your Wall Street connection. Opening a brokerage account these days is super easy. Seriously, it's often easier than putting together that bookshelf you bought last week. Most of it can be done online in a few minutes. You'll need some basic information: your name, address, social security number, and usually your bank account details to transfer money in and out. There are tons of brokerage firms out there. No, Not just your favorite pizza place. Your brokerage account is funded. You're ready to buy your first stock. Exciting, right? But also a little terrifying. Loving a company's product is a start, but it's not the whole story. Think like investors, not just consumers. Don't put all your eggs in one basket. Consider exchange-traded funds, or ETFs. Index fund ETFs track major market indices like the S&P 500. They offer instant diversification, perfect for beginners. All right, rookies, listen up. I've seen it all in this market. The good, the bad, and the downright ugly, and I want you to succeed. So I've got some golden rules for you. These aren't just suggestions. These are commandments if you want to build wealth and not lose your shirt. First rule, invest for the long term. We are not day traders here. We are not trying to make a quick buck. That's a fool's game. We are investors. We are buying pieces of good businesses and holding on to them. Think years, not days or weeks. Patience is your superpower. Second golden rule, dollar cost averaging. Sounds fancy, but it's simple. It means investing a fixed amount of money at regular intervals, say every month, regardless of whether the market is up or down. Sometimes you'll buy high, sometimes you'll buy low. Over time, it averages out your purchase price. This takes the emotion out of it. It stops you from trying to time the market, which, spoiler alert, nobody can do consistently. Not even me. Just keep putting that money in, steadily. Now, let's talk about the pitfalls. The traps. The things that make new investors cry into their cornflakes. I want you to avoid these mistakes like the plague. The biggest, number one, all-time worst mistake? Trying to time the market. People think they can predict when the market will hit its absolute bottom to buy or its absolute top to sell. Forget it. It's impossible. You'll drive yourself crazy and you'll probably lose money. Remember dollar cost averaging? That's your weapon against this foolishness. Just keep investing regularly. Another classic blunder. Panic selling. The market drops 5%. Oh no, it drops 10%. Ah! Sell everything. Wrong. Markets go up and down. It's called volatility. It's normal. If you've invested in good, diversified ETFs or solid companies for the long term, a dip is often a buying opportunity, not a reason to run for the hills screaming. Remember why you invested in the first place. Stick to your plan. Don't let fear dictate your decisions. Fear is the mind killer when it comes to investing. No fear. Mistake number 3, putting all your eggs in one basket. You find this one amazing stock. All right, class, you've been listening, you've been learning. Now it's time for some homework. Because knowledge without action is like a race car without gas. It ain't going anywhere. Your first assignment, open that brokerage account. I'm serious. This week, no more excuses. No more I'll do it later. Later never comes. Pick a reputable online broker. Many have no minimum deposit and offer commission-free trades on ETFs. It takes 15 minutes. Just do it. This is step 1 to taking control of your financial destiny. Your second piece of homework. Start small. You don't need thousands of dollars to begin. Can you spare $50 a month? $100 a month? Whatever it is, commit to it. Set up an automatic transfer from your bank account to your new brokerage account. Then, set up an automatic investment into a broad market index fund ETF, like one that tracks the S&P 500. This is dollar cost averaging in action. Set it and forget it. Well, don't completely forget it. Check in once in a while, but let it do its thing. This is how you build wealth over time. Slowly. Steadily. Third assignment. Keep learning. Read books about investing. So there you have it, folks. The stock market demystified. Not so scary now, is it? It's a tool. A powerful tool for building wealth and securing your future. It's not just for Wall Street wizards. It's for you. For everyone willing to learn, do homework, and play the long game. You now have the foundational knowledge to get started. You know what the market is and how to take those first steps. Remember, this isn't about getting rich quick. Anyone who promises you that is selling snake oil. This is about getting rich slowly and smartly. It's about consistent effort, discipline, and patience. Start with diversified index fund ETFs. Practice dollar cost averaging. Avoid rookie mistakes. Don't try to time the market. Don't panic sell. Don't put all your eggs in one basket. And don't listen to hot tips from your Uncle Sal. The journey of 1,000 miles begins with a single step. Your first step is opening that brokerage account and making that first small investment. Remember, guys and gals, you don't need a finance degree to start building wealth. Just a bit of patience and a phone with Wi-Fi. If you've made it this far, don't forget to like, subscribe, and tell us what stock market question you're too afraid to Google. Until next time, this is Finance Boss signing off. See you in the next video.